All right. Good evening. It is 11:05 Central Standard Time. Um, we are looking over here at April 28th to May 2nd. Not a weekly recap. I just realized. Take two. We are looking at April 28th to May 2nd. We're doing an analysis. So, um, just staying on this slide here for the beginning. How do I get started? Well, the futures market did open lower, and we do have a busy week ahead with the first quarter earnings. So more than 180 S&P 500 companies are set to release earnings, like Apple, Amazon, Meta, Microsoft, and some major firms like Berkshire Hathaway, Eli Lilly, and Visa. So just for your information, quick little FYI. Good to know that. Not that we care about the numbers or anything, but good for sentiment. So we know that yes, we have all of those, which does not show on an economic calendar. But speaking about an economic calendar, busy economic calendar this week. So Monday, no news. So I would expect some movement to take place on Monday, but nothing crazy. So I would after an objective is complete, whether it be intraday, whether it be a daily objective, assuming what I'm about to outline gets hit on Monday, I would reasonably expect it to pull back into the range. So whatever that range is. Tuesday we do have JOLTS job openings, and I'm just gonna highlight the main focuses. But we do have other medium impact news. All right, so Wednesday, 8:15, we have non-farm employment change. Then 8:30, we have the GDP. So that's going to be pretty important. But even more important than that, skipping ahead, fast forwarding to Friday, we have non-farm payroll. So while all equally important, I think they're all going to be very dangerous times to be in a position. So Wednesday, PCE price index 10 a.m. and then Thursday unemployment claims at 8:30, and then flash manufacturing. ISM manufacturing PMI at 10 a.m. Friday we have obviously non-farm payroll. So it's gonna be busy week. Lots of red and orange folder news. So let's look at the charts. Right here, we do have, if you can see my cursor, we have the sell side from here from 2023. So I labeled that as weekly sell side July 10th, 2023. And I'm going to try to make this hopefully 15 minutes long because I do have plans. But weekly sell side July 10th, 2023, you can see that we came down there. And then we actually went significantly lower. So the fact that we're trading up into that does not necessarily mean a reversal and back to these highs. That's very extreme. But I'm using this weekly level from long back ago, from July, to frame a setup. So you'll see, that was on a monthly, but that is a weekly level. Reason it's a weekly level is because I anchored it on a weekly chart. So I identified it on a weekly chart. And even though it is on a monthly, I showed it on a monthly, I prefer to put weekly. So we do have that weekly level there. You can see this week we hit it, right? First week of April, we came and hit it. And then next week, very small range week relative to the previous week. We stayed inside the previous week candle. Next week, we accumulated above it, and then we sold off and distributed below this low till this low, and from there we're trading higher. So all in the same week we went down and up. Over here we went down, so the chronological order of this would be down, came back up, all right, opened here, down, okay, stayed down essentially. We consolidated here if you check on the daily chart, which I'll show, and then we opened, came all the way down, came all the way back up. And so now looking at this is what I'm kind of highlighting. This wick, if you were to take the range from the close to, or this candle, if you were to take the close to the low and extend that out, you'll see that kind of lines up with that weekly sell side. Not the equilibrium, but not the equilibrium of that range, but it's all coupled inside, so not drawing too many levels. You can see we also have that new week opening gap right there. So it's not the same level exactly, but it's on a weekly chart. It looks pretty close. Here's the daily. So you can see that, you know, after coming down, we consolidated, right? And then we did have that dig lower. And then we came back up into that sell side right there. And now we're just chilling over here. So this is today's candle for Monday. Even though this is Sunday's trading, it's incorporated into the Monday candle. So you'd have to go down to a 4-hour to see anything of Sunday's candle. Now, first things first, right off the bat. Before we get any further, I said that we do have the earnings for the first quarter, and so a lot of and this is just a sentiment read, this is nothing price action related, but a lot of companies are starting to lower their forecasts for the second quarter and full year, quote unquote, preparing for potential fallout from escalating global trade tensions. So for me, although I do want to study how the dollar reacts to this, let's say we have good earnings. So I would expect, like technically, for the dollar to move up into this high. But I want to see how the news or the earnings affects the dollar. So technically, I like this high, is what I'm trying to say, because we have relatively cool highs here. We came all the way down, sell side sweep here. We worked this discount portion of the market and then came back up, and now we're trading right there. So I'd expect it to trade back up into here. And so my two, if we go back to a weekly chart, my two draws that I sort of, my gunshot to the head draws is what I like to kind of put on my notes. So basically two levels on a weekly chart that if I had to choose, how would I decide, or which ones would I decide? It's basically a certain price level or a certain PD array that I favor. Now on the dollar, considering the dollar has been very in sync with futures, if you take a daily chart and put the Nasdaq, the S&P, and the dollar side by side, you'd think it's the same. That's basically how similar it is. So there's been no correlation. So with that being said, the dollar's draw on liquidity could go to the April 14th, 2025 high, which is the premium array. So that's this high, or it could go down to this wick, which is the April 21st weekly candle, discount wick, consequent encroachment. So it's very 50-50 for me, but I'd have to wait, and then depending on which level is hit first, so it's kind of like the analogy tag, which level is hit first, and we see that which level is tagged first, then I'd see what is the opposing side of the marketplace. And so you can see that kind of lines up just by eyeing it, the order block here, right? So you can see we worked into that order block once so far on the daily chart, and then we have that weekly candle high right here. So we have basically sell side draw here, anything lower here, and then buy side draw here, so anything higher up here. So we're in the middle of the range. You could draw out a fib drawing your premium and discount, and that's why I do favor this. I don't think it's a unexpected move, or I don't think it's unreasonable to go up there, but anytime this could change, and that's just my focus. So I want to see by New York AM session, where are we relative to that high? Are we further from it? Are we closer to it? Or have we already hit it? And if we've already hit it, then I would want to see what's next, and that would be targeting this daily high. So here's the new week opening gap. You can see same thing from the weekly chart, just transposed down to the daily. Now these are all the 5 new week opening gaps. So if I'm correct, it is a 4-week look back. Should be. Sorry, 5-week look back. It's a 5-week look back of the new week opening gaps, which is the Friday closed, Sunday open. I guess what I'm trying to depict here is if we're looking at a 5-week life cycle or a 5-week look back of the NWOG, is what I'm just going to call it. So tired of calling it the full name. These highs don't look that unreasonable. You can see we've been essentially inside this range right here. Sell side here, swept here, and then we have buy side right here. So if I had to, gun to my head, that high right there, which is the April 23rd, 2025 daily high in the form of relative equal highs. That is gun to head analysis, which is going to be opposing to what's next is going to be my futures. Well, it's not next, but before we get to that, you can see also premium discount, 20-day look back from this high to that low. Equilibrium's right here, so it's really not unreasonable to expect that high because it's in such a deep discount. The dollar has went lower. The dollar has traded into this order block, and a higher draw would be up into the SIBI or volume imbalance. So this is just like acting as a magnet, and this is my low hanging fruit right here, these two highs, and that sets up the week for me. So meaning it is one piece of the puzzle being put together to create more clarity for me. All right, we have the S&P monthly chart. Now before I get into this, I have some more notes that I took from just as a sentiment read. So I have written here, Trump has recently softened his rhetoric and Beijing exempts some U.S. good from tariffs. So some cool down, not as much heat on tariffs. Well, I think that's just short term. This is very short term. So it just creates sentiment. Sentiment allows for new liquidity to be created because it riles up a trader. I don't know if that's the right way to put it, but it allows new orders to be taken into the marketplace because it instills one side of your emotional spectrum. That's a decent way to put it. But these things, I don't really believe in them because at any moment in time, it could be 3 minutes from now, there could be another news release that completely contradicts everything that I just said about recently softening the rhetoric on and Beijing exempting some U.S. goods from tariffs. So it could instantly go from a yes to a no, is what I'm trying to say. And so I just kind of try to use this as a sentiment read. But yeah, last week the Dow gained 2.48%, S&P rose 4.59%, and the Nasdaq composite surged over 6.73%. So, some people, now this is going to be a little contradicting, but some people are saying, and this is via online source, can't remember the exact website name off the top of my head. I think it's US Daily or something, I can't remember, but the first estimate of Q1 2025 GDP growth is expected to show a significant slowdown. So possible contraction is what they said, but I have no clue what that exactly means. Sounds a little bearish to me. GDP is on Wednesday, so at 8:30 a.m. like I said. And different sources will always say different things. That's the thing. So this really provides me no clarity, and if I'm being honest, it doesn't provide the sentiment I'd like it to. I like sentiment reads more intraday, but this is just like something I wanted to add in here for logging purposes, so that when I go back in my journal, I can just see what were the headlines saying at the time. But no real incorporation of analysis, although it will be mentioned, but there's no like trade being taken off of this. It's not like it's not like I'm thinking, oh, okay, investors, blah 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 blah, so I'm gonna buy. No, it's based off all these levels that I'm showing here. So focus more on the visual that is being shown. So we have a monthly chart, and even though we do have sell side here, it's just things I like to point out in the form of relative equal lows, which you can see how fast we were from this week to go down in there, and then the downside that was delivered, and in the form of a wick, the upside that was delivered. So I wouldn't mark this as sell side, but it's good to note. Here we have a weekly chart. Now we have this sell side that I've had for a long time marked. So that was my draw, and I might be wrong, but I did mention that in one of the videos, or I did mention some PD array, and I'll tell you which one on the daily chart. I just can't remember if it was this one or if it was the daily SIBI, but that'll be on the daily chart. Yeah, so right, you can see the S&P from the open, we went down, and then since they're contracted higher. So we do have a SIBI here. We do have this volume imbalance, which I really, really, really favor, if I'm being honest. That is what my analysis all lends to, is that weekly volume imbalance, which is formed going to the downside, but I'd like it as a upside draw. New week opening gap, you can see, same as that weekly sell side. So we can expect some fluctuation back and forth in here, not throughout the week, or sorry, not throughout the entire, like on a weekly chart, but more on a intraday 15, 5, and 1. So focus on that, and my focus is over here on this weekly volume imbalance, which is the weekly volume imbalance formed on the March 31st, 2025 candle. And then if we get animated, it could go to the butt end, or the low end, or the tail of this bearish order block formed on March 17th, 2025. So that's that candle right here, March 17th, 2025. So we basically have here this volume imbalance, and then this, we'll just call it the low, but I'd be looking at the entire range to see when we trade there, what day, and what time, and that would constitute a reversal depending on how early on the week or how late in the week. Here's a 5-week look back. You can see we have that new week opening gap up here, but I think although it could go there at any time, I'm being nimble in selecting, yes, this volume imbalance, which is a new week opening gap, or an NWOG, but this is sort of my extreme end of the selection of premium array, or premium. So we have that low of that bearish order block right there, and if you must, mark out the, what is this, the I'm blanking, the bullish order block high to the open, and see if we trade any lower how that range is reacted to. So ideally, if I must, like if I had to, the most ideal setup for me right now at this time would be going and touching the high of this, or even it would be better if it didn't, and then going to this. But this is my focus up here. So volume imbalance and then up here. Daily chart, you can see we have that daily volume imbalance. So not the weekly, but the daily one. You can see that right here. And then we have that daily fair value gap, SIBI, formed on March 10th, 2025. And so that's that bearish order block from the weekly chart. No, that is not the bearish order block. Bearish order block is a little more to the left. So just a couple candles to the left, but we do have one here. But yeah, the idea is, well, this daily volume imbalance right here, I'd want to see it close that. So that's a very, very low-hanging fruit objective. I want to see it close that, and then meaning going up into there and then higher. And so these three candles right here, we have the third day low extended out, so it could trade down a little bit lower, which also lines up perfectly with that high right there, which is the bullish order block that I just mentioned. So if you take that, that's about, I'll say 54.75. All right, go back, and right here extend that high out. That would be about 50 on this chart. It looks like 5,500, but this is how I would confirm it without really having to go back on a trading view chart. You can see we opened, we went a little bit higher, came down, and then closed here. So came down, pulled back up, closed, and then opened the next week lower. So closed here, opened, came down, and then since then we traded higher. And so that's why I'm looking at this high as a bullish order block. So that's just inner musing. It might not make sense, but that's how I'm reading this. I'm looking at open, high, low, and close. That's it. Boom, boom, boom. New week opening gap. 5-week look back. We have that very nice right here. New week opening gap. Lining up a little bit higher than the daily volume imbalance, but just being nimble, being selective, and not searching for too much. But yeah, that's why I'm looking for the daily volume imbalance high to close. And there's the premium discount 20-day IPTA dealing range. I don't think this premium range is primed for a reversal. I think that's the best way to put it for me without getting too long, about to reach 30 minutes. So I just don't think that we're gonna reverse yet. So I'm only able to see till Wednesday. That's basically what I'm saying. So up till Wednesday's trading, I don't think a reversal is likely. I actually think we're not bullish, but it could go higher to engineer liquidity for a possible move, whatever it be, on Thursday and Friday. That's the best way to put it. So Monday, Tuesday, Wednesday, expectation set. Thursday, Friday, blank slate. So yeah. The Nasdaq monthly chart. Bada bing, bada boom. Weekly chart. You can see we're above that daily volume imbalance, which should not be on this chart, but it is. Yeah. Shouldn't be there, but, and the reason is because this is a weekly chart. That's a daily level. But now you can see, we got an earlier look on that measurement. You can see that we're above it. So Nasdaq is the strongest so far out of the three indices, being S&P, Nasdaq, and the Dow, which lines up perfectly with the levels that headlines were saying, basically. And I'll quote it again. Last week, Dow gained 2.48%, the S&P rose 4.59%, and the Nasdaq surged 6.73%. So another percent won't hurt is basically what I'm saying on the Nasdaq, meaning that my draw is higher. You can see new week opening gap here. We have that previous week candle high as a low-hanging fruit. Watch that. And then 5-week look back, bada bing, bada boom. If the dealing range, 20 days, you can see that the equilibrium is being very well respected. So it does look like it wants to go higher up into that high. But Nasdaq weekly draw on liquidity would be, once again, same, kind of similar to the ES, but because the NQ is stronger, I would favor this order block end, meaning the lower end or the tail. I would favor that. So watch that full entire range, nothing in particular, but that full range. So when it is approaching that, that's when you can start to mark and draw your gradients, and then you want to see, does it go higher from there? Or does it constitute a reversal or a consolidation? It all depends intraday. Alright, daily chart. All those levels. The daily fair value gap, SIBI high and low from March 10th. Right there. So very clean, very nice. It could revisit that, even though we've transversed, even though we went up and down through that SIBI multiple times. I do like that range. It's very clean. I had it drawn a long time ago, essentially before the falling of the stock market, but that was level that was being watched, and then we went above it, came below it, came back up, rejected. Beautiful. So I'm not electing to use any of these levels in this, simply because this level is just very nice for me. It draws more importance to me because I was able to watch it real time. So the way I would process it when it's hit, if it's hit, is, oh wow, these are really old levels. I had this marked on my chart since basically it was formed. The day after it was formed, 2 days after it was formed, and the market is returning back into it. This level, all these levels here, whatever these candles are, it wouldn't have as much significance to me, but they're still viable. And so, daily chart, look at that wick right here. This candle was the candle that essentially began that 3 to 4 day run lower. So there's definitely buy stops or trailed stops there is what I'm looking at, meaning above this high. But I'll just draw the premium wick consequent encroachment, and that candle is going to be the April 2nd, 2025 premium wick consequent encroachment. Take the fib, open to high, draw it out, get your level, eyeing it 19,800. And then we do have that daily fair value gap, SIBI high and low. Alright, new week opening gap. Once again, I'd expect some sort of up and down action to be taken there, and I would look for signatures that would lend to a higher NQ, and that's what I'll be focusing on this week. 5-week look back, beautiful. Look at the lining up of that new week opening gap. At the dealing range, you can see that once we gapped away from the equilibrium, it came back into this gap and then exploded higher. So it's sort of telling me that, yeah, we do want to go higher. As much as I like this high, I don't want to say that high, just because anything higher than, how do I put this? The higher you choose, the greedier, not greedier, I don't want to say greedier, but the probability-wise, the less likelier it is to pan out. And so I'm looking for low-hanging fruit, and at any time, if the level is hit, I just go into a phase or a stage of reassessment and think, okay, what's higher? And that high right there is next. So essentially, I think that there's trailed buy stops here, or any buy stops here, and so I'd like to see that level hit. So large fund liquidity is the focus. All right, if you found this video helpful, if you liked it. If you didn't like it, just like it. And any questions, comment, go ahead and share, and please do subscribe. So with that being said, I am going to go watch a nice movie. Monday's trading, no news, but I will still be watching it. So I'm gonna try to be up early, and I'm not expecting too much speed unless we have any headlines or change in the environment of the whole political scene. But yeah, I do expect some movement. And I've actually been rocking the 30-minute high and low sort of quote unquote model. So I've been forming a very clean model with it that has resonated very well with me. So despite all the other stuff that I know, this 30-minute model has been just it's very satisfying for me. It's very easy. It essentially pans out every hour, every 30 minutes really, but it takes some time to hit that buy side or sell side, and then the first presented fair value gap. It's always there, so I'm having a lot of fun. I don't want to say too much, because I don't want to get this going for too long. But yeah, probably no live streams this week unless I feel like it, but live streams have been sort of distorting my focus from the market. So I focus more on like the whole live stream aspect of it rather than price. And so what I've been doing is just sending out a text on Discord and not really Twitter. But yeah, Discord is where it's all at. So make sure to join if you're interested, if you want to talk. I enjoy talking to people, and I hope you have a great rest of your week. Good luck and good trading.